Good day, everyone. Thanks for taking time from your busy schedules to join us today. I'm Ken Watson from Everbridge Center of Excellence. I'm based out of Dallas, and as a Center of Excellence member, one of our primary jobs is to help clients and prospects with documenting their as-is people, processes, and technologies while understanding their to-be vision. In doing, we help craft business cases that reflect the business value from using Everbridge products and services. And those business cases are complemented by Forrester research, as well as hundreds of actual implementation learnings. And we do this free of charge as an extension of your sales team. So assuming you took a few moments to read my LinkedIn background, you'll see I'm like many of you. I'm an operations person with similar experiences, especially with Synchrony Financial and an asset wealth management firm. Coupled with my Deloitte consulting experiences, I and my Center of Excellence peers, we're pretty good at helping you justify your investments. So in a moment, the panel and I will share our experiences, in particular, some lessons learned during numerous implementations. In short, we'll give you some additional insights and the business case for, in the age of COVID-19, what's the new normal in financial services. So now let me introduce the panel. Kathy, would you be kind enough to give the audience 2 minutes about you and your firm?
Absolutely. Afternoon, everybody. I am speaking to you from my desk in Toronto, Ontario, Canada. I do represent the Americas. I'm an executive member of Provenir, and I look forward to going through some questions with you today.
Thanks, Kathy. Wesley, would you be kind enough to give the audience 2 minutes about you and your firm?
Sure. Hi, everybody. My name is Wesley Wright. I'm Chief Commercial and Product Officer for Varo Bank. Varo is a digital challenger bank in the US, focusing on the consumer market. We've been around for about 5 years, and I joined Varo at the very beginning after a long career at American Express. We offer checking and savings and credit products to everyday Americans, people that live paycheck to paycheck. It's a segment that isn't very well served by the traditional banks in the US market. We are distinctive among our peer set in that we actually went and got a bank charter and became a bank. We received the bank charter last year. So then we changed our name from Varo Money to Varo Bank, and now we're operating as a nationally chartered bank in the US.
Thanks, Wesley. And Peter, our final panelist.
Hi, Ken. Hi, everybody. Peter Tilton's my name. Also dialing in from Toronto, Canada. Although an Australian accent, which you'll pick up on. I take care of digital for Royal Bank of Canada, which is Canada's largest financial institution. Just to give you a sense of scale, we're currently the only non-American or Chinese bank in the top 10 banks of the world by market capitalization. So we're a big retail and commercial bank, and I look forward to sort of providing that perspective on this panel.
Thanks. Thanks to all the panelists, and thank you for joining us this afternoon or this day. Let me level set with everybody. In the age of COVID-19, what is the new normal in financial services? Nearly 80% of IT and security leaders believe their organizations lack sufficient protection against cyber attacks. This came from IDG. This is the case even with increased IT security investments made last year in 2020 to handle the challenges of a distributed workforce. Yet the transition to remote working isn't the only element troubling security teams. Enterprises have also had to shift their modernization priorities and instead concentrate their efforts on strengthening their defenses. So how can we increase confidence in our digital transformation and response posture at this pivotal moment in history? How can we weave resilience into our business continuity strategy? How can we ensure our transformation projects meet high levels of reliability and data accuracy while meeting regulatory compliance guidelines? Thanks for joining Everbridge and our select group of industry peers to discuss how to deliver transformational change and build operational resilience while driving growth and improve customer experiences while adapting to the new normal. So let's talk about our first question. Our first question is, knowing that we're going through digital transformation during post-COVID-19, what are the digital experiences that our customers and our clients expect? I'll start with you, Kathy. What are those experiences?
Thank you for that. So, Provenir, unlike my partners here, is a software provider. So we are a company that is in, over 40 countries, and we deliver one cloud suite for decisioning, data insights, and solutions to all of our customers, which are the likes of those that are on the panel with me. And so we've had to respond in a global fashion to support our customers to deliver that experience. And the way we do that is by providing a very agile technology that puts the ability to respond to what we used to say regulatory or market changes, and now we're saying a pandemic, to be able to allow their consumers to, or their customers to interact with them the way that customers want to, need to, or have to, in a very customer-friendly manner, while not sacrificing risk or security to be able to deliver that agility and enhanced customer experience. Mm-hmm. So we provide the underpinnings to do that in collaborations with the organizations that deal directly with their customers.
Great, great. Wesley, you want to talk about customer expectations during post-COVID?
Sure, thanks, Ken. We're all digital, so we don't have any branches. We don't have any physical locations. So we designed our whole offering with solutions for the situations where people might occasionally need some sort of a physical interaction. We have backed it up with customer service, high quality customer service, a base domestically in the US to be there when our customers needed to talk to somebody. So I think we were well positioned when the pandemic started and the lockdown started as an all digital player. And as customers were everyone was becoming more accustomed to doing things online, right? Whether it's like you wanted to support a local restaurant and you like a friend of mine started up an ice cream shop and we wanted to support her. But she set up a way where we could, make the purchase online in advance and go pick up the ice cream and bring it back home, right? Mm-hmm. And so all these businesses did these sorts of things and people became accustomed to engaging digitally who hadn't been before for doing things like buying groceries or ordering food that they might have done over the phone or in person. True. So we were well positioned for that. And so I think that in general, what we'll just see going forward is customers are much more comfortable engaging digitally. And so they're going to expect more from those digital solutions. They're going to expect strong availability for it to be there when they need it. And we're only going to see this trend continue.
I agree with you totally. Peter, you want to add some additional comments to that about customer expectations and their experiences?
Yeah, certainly, Ken. Look, I think in terms of customer experiences, there's two profound shifts that we're seeing up here and in Canada and Royal Bank. One is the shift in terms of servicing. So we've seen, just give me a second, I've got a lot of noise going on behind me. It tends to happen.
I think too that I could, maybe add is that, our customers, so end customers, we're all end customers, right? Mm-hmm. So, we've got situations now in this world where, as to piggyback on what Wesley was saying, that we're forced into digital experiences in some cases where we never did that before. And the expectation, when you ask, what are the expectation of customers? The expectation is that that should be the same. And mm-hmm. that in this day and age where we are, if we're agile enough in our behavior to shift, to respond to a changing condition, we expect those we interact with to, and therefore the underlying technology and decisioning platform that enables them to be that agile.
Yeah, I agree with you totally.
Sorry Peter, about that, Ken. I've got trays in the house and make a lot of noise in the background, so I appreciate Kathy jumping in. In terms of profound customer shifts, I think there's two really significant ones. The first is happening around servicing. So, we've seen digital servicing, I'll give you some statistics, go from about 88.5% pre-pandemic to around about 95% currently. So if you stop to think about that, that means about half of all branch servicing has migrated into digital. Mm-hmm. So that's a very significant shift. The other big shift really comes in terms of access through mobile. So the move into mobile has been profound. We're seeing around about 66% of all touch points through the mobile asset. And customers are sort of shopping us in mobile like they've never done before and behaving in a very profoundly different way. So that'd be the two mega trends. Other banks in the US are reporting big shifts into digital sales. However, we're already there. We're already close to 50% up here in Canada. So that one's probably a little bit less for us.
Wow, wow. Yeah, when you mentioned that shift from physically being in a person in a branch and also being digital and moving to mobile, one of the things I've seen is you need visibility and you need tools and you need people who can build that visibility. I don't know if you, Peter or Wesley, can talk about how let's start with Wesley. Wesley, let's start with you. How can you build the tools to actually build that visibility, to make enhancements, to allow your customer base to make that move to digital and especially mobile?
So yeah, we have a number of different ways to understand what our customers are doing, what our customers are looking for. Again, I think most banks have a lot of these tools from a digital perspective and instrumentation to see, what parts of the app they're using, what parts they're completing, what parts they're not. I think one thing that we try to do is, and we did this before the pandemic as well, but is to really listen to our customers and leverage many, many different touch points we have nowadays for customer feedback that we didn't have before. So app reviews, digital surveys, social media, and constantly like understanding like what are the issues that customers are having and how do we then adapt and change our product accordingly. And certainly in the US, a big thing that changed with the pandemic was government stimulus and people getting access to money from the government, to increased unemployment benefits, and being very anxious about, when am I going to get that money? I really need it, right? And so, so that also we had to really think about our servicing, our messaging, our capabilities, our alerting systems to customers to give them confidence that, they were going to get their money when they were expecting it.
Yeah, that's very true. But when you talk about servicing and when you talk about messaging, I remember talking to Kathy earlier when we were preparing for this. One of the things that happens is you have limited resources. And when you're making these enhancements, you have to use some of the same people that you had to make the enhancements with that have to maintain it. And Kathy, I believe you were talking about how the agile development and how you could actually build upon those systems. Could you give people a little bit of context?
Sure, right. So it really is the speed to market and the ability to make changes. And as we are, have been forced through the pandemic, but essentially I think what it's done is just really accelerated roadmaps in a lot of places across the digitization journey to do it inside of a year. And, we have had the pleasure and ability to meet those demands with our customer base. In fact, we had 25% growth year over year in at the COVID-19 year.
Right.
And, seeing those that were very successful were those that were able to respond to the demands of the customer. Wesley talked about different ways of interacting. There's also different ways of lending, the buy now, pay later. And how do you, change risk strategies and mobilize and operationalize models? And so I think the key in when you're looking at technology partners is ensuring that they can be flexible, agile, meet compliance and regulatory requirements, real time, and putting the ability to actually maneuver, manage, and make changes in the customer's hands and not into an IT project or technology. And what that does is create an ease of use so that those key resources can be used in different projects, but you can actually move at the speed that our customers are able to do that. And we've had the ability, we went to COVID completely remote in something like 24 hours and have delivered 22 projects from beginning to end in a complete remote environment, taken through to production. So it's really been, the pandemic has a lot of sometimes sadness and other things, and it's really changed. It's forced us to do things differently, and we're really looking at continuing that with our partners.
It's funny that you mentioned that. When I was a practitioner, when I was with, and you look at my LinkedIn profile, I was with GE Capital Retail Bank, and I was with an asset wealth management firm. What was very important was visibility, having visibility to your data, having visibility to what's going on. And that visibility has to be complete, it has to be accurate, and it has to be timely. You don't want visibility that's well after the fact. You don't want visibility that's not accurate, that's missing certain data points. And so it needs to be complete, accurate, and timely. The reason I mention that is that's part of what we do at Everbridge with physical and digital disruptions. We want to make sure that you have that visibility. But I remember talking to Peter when we were preparing for this again. And Peter, you were talking about how having visibility to your clients and profiles and understanding their expectations. Could you talk a little bit about what you're doing at your firm?
Yeah, probably an interesting angle on this, Ken, like I think we spoke about, is that one of the really significantly profound things that has shifted during the pandemic is how we've had to build for advisors as much as customers. And the reason why is because of the shift that we're talking about is, I'll give you some statistics. Before COVID, meetings with our advisors, around about 2 to 3% were done digitally. So they were done through video conferencing and so on. And we're pretty advanced. We've got 2 million customers with financial plans online and so forth, and they can video conference financial planners and so on. So we're already in a good place. Call about 3%. In March and April, that was sitting around 72 to 73%. Wow. So these were human beings sitting at their homes, speaking to our advisors sitting at their homes, in at least 2 locations, sometimes more. So we had to focus and build a lot of our efforts and resources and get visibility and connectivity. It's really more about connectivity, so that we could connect everything from sort of CRMs and meetings and appointments through to how you actually do more sophisticated things. So an advisor can do digital identity and digital ID and V, so that they can send a secure link to a customer on a mobile, activate an app and scan a license, tap a passport, do a selfie, do those sorts of things so that we know who they're talking to. And so, look, I think the fundamental shift is digital has become responsible for all interfaces, whether that's an advisor interface or digital direct, which is what our core business was before the pandemic.
Yeah. Wesley, I remember talking to you about this as well. And one of the things you were saying, you were digital a long time ago, and you were doing some things to make enhancements to that visibility. You want to add some additional context around that?
Sure. I mean, I think for us, again, we're newer, right? We just launched. We launched into the public in 2017. We relaunched our whole business as a bank on a completely new tech stack, completely new app last year. So we're constantly evolving. And so I think the roadmap that we followed, we probably would have been following it regardless of COVID, but COVID probably made the need even greater. So example would be like, we started out with checking and savings and tools for automatic savings or for getting your paycheck early. We don't really charge any fees, no monthly fees, no overdraft fees, et cetera. One need that we saw in our customer base, who's more, lower middle income or lower income, was to get access to credit. Right. In the US, there aren't good ways to get like affordable access to credit on a short-term basis when you need it. Like the payday lenders, it's exorbitant, gets really people trapped. And then, a lot of lower income folks don't have the credit scores to qualify for a credit card. So we launched a product last year called Varo Advance, which gives people up to $100 advance for 30 days for a very transparent one-time fee. Right. And they have to build up some history with us first to qualify for it, and then they can ladder up. And we're working on continuing to increase that amount. But that's sort of a tool of being able to be like, okay, I've got to go buy groceries and I'm a little bit short and I have access to get some extra money to do that. Or it might be like, I got to repair my car, like my tire blew out and I need some extra money to pay for the tire. Right. These are tools that are very helpful in the US. So that's just an example of the type of thing that we did listening to our customers. But the economic stress that COVID created for lower income Americans, sort of made that need even more apparent.
That's great. That's great. So one of the other things we talked about was the fact that, hey, these challenges that you incurred with COVID, you had to change policies, work from home. You had to actually have better tools, more different people actually using the tools. Those challenges are not going to go away. Matter of fact, they're going to stay as far as that's concerned. But do you see any new challenges in the next few months that are coming out in the marketplace? Wesley, we'll start with you.
I think, you know, it will be around customer behavior is going to change. People are going to look to spend money at different types of places. Hopefully, you know, more people are getting back to work in the US, and then the unemployment benefits are going to run out for people as well. So you're going to see a lot of changes happening in people's lives. I think one thing to be very mindful of, and this, I think this kind of gets to the work that your firm does, is that a focus on cybersecurity and fraud prevention is going to be really important. I think one thing that happened that everybody throughout the banking industry saw is that fraud got a lot worse in the past year, right? And ranging from just there were people, you know, sitting at home on their computers, which made them sort of easier targets for fraudsters to get them into scams and victimize them. We saw a lot of social media scams, like we do a lot with social media, and a lot of fake accounts being created under our bank's name. You saw, you know, fraud with around stimulus, around the PPP loans in the US. And then obviously we have these highly publicized ransomware attacks happening, right, in different sectors of industry. So I think that maintaining that vigilance on cybersecurity is going to be incredibly important going forward. And you know, if it's, I'm sure that Peter and the folks at RBC with their resources and their scope are incredibly focused on this, but as a smaller player, we're focused on it as well.
Peter, you want to add any additional comments on some of those changes or challenges that you see?
Yeah, building on what Leslie's saying on fraud, I might just talk about other things, because completely agree with what he just said about fraud. It's always going to be a key focus for the bank. I would suggest two others. The shift into mobility is profound. So we've had about 5 years of migration to mobile in North America in the first 5 months of the pandemic. So the consequences there that need to be considered and accelerated is things like, how do you cross-sell into mobile? How do you, if you're a trading bank, investments, how could you do nudges for mortgage renewals, things that are perhaps more complex, personal lending, credit adjudication, those sorts of things are very important. We have about 40% of our customers are mobile only or mobile dominant now, which has more than doubled in the last 2 years. So this is, I think mobile is really critical. And the other one that's going to be, I think, a very complex thing for most banks to solve for is off-ramps and on-ramps going from digital to advisors and that sort of connectivity. You know, that it is still a space for banks generally, 80-20 rule across banking, that you make about 20% of your money out of the simple things, about 80% out of the complex things, commercial lending, mortgages, those sorts of things. And the latter do generally still involve some sort of connectivity to human beings, to advisors. And I think that'll change. We'll see smaller, less frequent micro advice conversations and much more hybrid digital human sort of connectivity. So building for that, I think, will be a challenge, and that could be a consequence if they're not resolved for by financial institutions. That'd be the two big ones, I think, that are the new work that we have to do over the next 2 years.
Yeah, I agree with you. I agree with you. Kathy, I believe you may have seen a question that came through, which was basically, can anyone speak to the use of alternative data to be able to offer financial services more broadly? And I know your firm actually works to help build different DevOps approaches.
Yeah, so I absolutely can. I'll address this question. I just wanted to tag on to what
Yeah, sure.
and Peter said with respect to the changes. And really, the changes are how we're interacting and how we're taking what was traditionally longer processes or in-person processes and really, cementing that. And we do provide that support. That's the role we play to the organizations, to be able to put the plumbing in or connect the on and off ramps, so that you can have a complete digitized experience and be able to actually understand and have the insights of your customer and how to respond to them. So real-time model operationalization, going into models and making changes and seeing the impact on real-time data right in the software. One of the ways and innovations that we've brought to bear so that companies can actually do that and not have to spend 6 months in a model refresh cycle to be able to meet those needs of having to change. That brings in exactly, into M and Outlook's the ability to use alternative data. So we are an API driven business. We have a product we call a marketplace where we bring in all sorts of providers, not only data, fraud providers and other that we can connect to you via one single API to be able to pull in any type of data that you would like and then operationalize that, whether you're looking at it for enhancing scorecards, decision trees, or your model in general. But there is a lot of data that has also been born out of this last year, 18 months that we can start to use to inform the models that our customers use within their own strategies.
Yeah, it's funny you mentioned that. Being in financial services the last 10 years of my career, they have alternative data from mainframes to minis to servers. The data is all over. And one of the things that our firm, Everbridge, does is we have over 300 plus pre-built APIs to some of that data. So you can have a one dashboard for a collaboration. You can reduce your collaboration time for physical and digital disruptions. So we feel the same. We want to make sure that you can actually have an API or pre-built APIs to whatever your existing infrastructure, as well as some of your new infrastructure, so you can actually build out that collaboration tool or that collaboration engine. And so that's very helpful. That's very helpful. One of our last questions before we open it up is, when you look at the implications and the challenges that are happening, especially post-COVID, one of those implications is regulatory. Regulatory is happening. I believe there's the Bank of England. They are saying that by March of 2022, you have to have this thing called operational resiliency, where you're able to minimize disruptions. You have to be able to prove that. So that's the Bank of England. Here in the States, you have data and privacy concerns. You have the California Privacy Act. All these different regulations and rules. How are we going to tell our clients and our prospects, how are they going to address that with your tools and your approaches? I'll start with Wesley. As it relates to regulatory and new rules and regulations coming out, are you seeing different approaches you're going to take post-COVID that or things you've already put in place?
I think we're probably in maybe a different position because we're at a different phase of our life cycle. We literally just received a bank charter less than a year ago.
Right.
And so we're a de novo bank.
Mm-hmm.
And we're then working with the OCC very closely,
Yes.
their exams twice a year. We're kind of building out our roadmap, but we're also at a smaller scale. We're not systemically important or anything.
Right.
Right. So I think for us, we focus at the heart of our organization. And, also we have a lot of Silicon Valley folks, and there are a lot of people in the fintech sector who will say, well, why do we need regulation? Or I don't want to be shackled by regulation. We don't view that way in Varo. Like, that's part of why we decided to go for a charter, because we think it's all about consumer protection. So like when you talk about regulation around operational resiliency, right? That's about preparing to protect customers and protect them, right? And we've proved, I think, that we were resilient. A lot of the industry did amazingly well, but we want to be prepared for the next event, whatever it might be. So I think we embrace it as we want to serve our customers. We want to protect customers. And I think we're just ready to evolve as the needs change around issues like privacy, cybersecurity,
right,
continuity, operational resiliency. But again, because we're digitally focused, as long as we have the right architecture and infrastructure, scalability, security, right, that's the foundation for us.
Mm-hmm. Peter, did you want to talk about how some of these new regulatory challenges, changes are coming up, and how that may cause you to change your approach?
Look, regulations are a really critical part of the industry, and certainly open banking is hitting North America, and it's a little bit late to North America in comparison to other geographies. There's consultation underway in Canada. It's in full force now in terms of North America. And really, I think the most important thing is, for speaking as a bank, is to take care of your customers, make sure that you've got outstanding NPS and that you don't do anything that abuses that privilege or risks your license. And if you look at where regulation has really come from in places like the UK and the EU, is typically it's come from whether it's inappropriate practices, but also problems of liquidity. The global financial crisis brought a lot of regulation. So, you know, it's something that at RBC we take very seriously, is about the privilege of having our customers and bringing those sorts of changes, about whether it's about, you know, the utmost levels of security through to resolving for things like being able to see a broader view across the industry of your balances. It's important that banks and other financial institutions work with regulators and stay ahead of it. I mean, at the end of the day, we've been building APIs and API stores and you know, connecting with other banks in those sorts of matters now for a number of years. And really all that regulation is doing is trying to accelerate that and bring in other players as well.
It's funny you mentioned the acceleration, because I remember when I was on the operations side, there were annual planning sessions. You had the annual planning sessions, but I think because of COVID, it's no longer annual. It may be quarterly, if not monthly, where you're planning for the next cycle. And so you're planning for new tools, new staff. It's no longer putting together your budget at an annual basis. It's definitely accelerated post-COVID. So for me, and what I've talked to clients and prospects about, is that new normal is that sense of urgency, the acceleration. So I agree with you. It's the regulations are just improving that urgency. I would like to encourage those who are attending to ask questions, and we'll take them shortly. So if you have any questions, please put them in the chat and we will take those shortly. Kathy, one last thing I would like to mention before we take some of the questions. What's one of the things you want to leave people with to think about when it comes to post-COVID?
I think really it's you know, something that I started out with and runs through the whole theme of this, and it's really ensuring that businesses can respond to the rapid changes and provide, you know, easy financial services in any environment, and be able to deliver even those higher value, if you will, or what were traditionally in branch, in a digital fashion, and how they do that in a compliant, you know, obviously with, you know, the appropriate risk measures, but yet not at all degrading the consumer experience. And to do that, you need an architecture and partners in your ecosystem that are flexible, scalable, agile, understand the compliance, can get it done quickly in terms of implementation, to put it into your own hands, and is easy to use so that you can use it to navigate the business challenges and opportunities that come every day. And I think that that's both as a consumer and a business. I think it applies to both.
I agree with you. Definitely need partners to get it done quickly. And I also agree with you. You want a high value partner to work with you, who can help you with scope the risk. It's one of the things that Deloitte taught me is it's really 3 attributes you have to worry about: scope, timing, and resources. If you don't have the resources, you don't have the people or the money, you have to change your scope, or you have to change your time. If the time is too short, you have to change your scope, or you have to change your resources. One of those 3 attributes has to be modified. So you absolutely, I agree with you 110%. Wesley, one of the last thing you want to leave everyone with as far as the discussion today?
I think it's all about the consumer. You know, technology, digital technology, data, you know, advances in data technology, et cetera, are bringing, you know, so many options to customers. So, you know, much more access to credit, you know, buy now, pay later, cash advance capabilities, ability to move money around seamlessly, to invest in different ways. So that's really where the financial services industry is headed. And it's going to be important for players in that space to, support their customers, kind of adapt with their customers, but also continue to earn their trust and, help keep their money safe.
You just mentioned something very important, and that's trust. I saw a piece just recently that it takes you a long time to build trust, but now with ransomware and with losing certain skilled staff, you can lose that trust overnight. How do you maintain it in this post-COVID world?
No, I think, Ken, it's a huge challenge, because also it's very easy to Peter's point about open banking, right? It's very easy for customers to switch, right? It's very easy for them. They're in the US now, there are a lot of new tools to allow people to switch their direct deposit very easily, to switch the card they use to pay for something very easily, right? And players like us are offering those tools to our customers to get them to switch to us, but that means our competitors offer those same things, right? So the bar is higher, right? But this is all to the benefit of consumers.
Yeah, I agree. Peter, what's one of the last things you would like to leave people with as far as our topic about post-COVID, the new normal?
Yeah, thanks, Ken. I'd say the new norm, and it's actually, there's some resonance in what Wesley was saying, which seems to be a bit of a theme that we're all agreeing today. Is that I think for the first time, we've gone from supply side to demand side in digitization of banking. So up until COVID, we were building things and educating customers how to use them. We've got like AI. We're some of the first to the market with our savings accounts, automated savings accounts, automated budgeting. We've got 1.5 million Canadians using AI for budgeting. We've sent over 1.5 billion nudges out there, sort of AI-driven nudges to help them understand their money. And we had to spend a lot of time and money marketing, educating. But what's happening in COVID is the supply side now is consumers are driving the demand, and they have high levels of expectations. They are shopping differently, not just in terms of for financial services, but also across e-commerce, and the demand is there. So there are significant risks if you can't keep up with that demand. I mean, if you look at my home market of Australia, I mean, Afterpay that Wesley commented on, which is on the buy now, pay later, is worth an order of magnitude more than any Australian retailer. So the equivalent of Macy's in Australia is worth about the 10% of what Afterpay is. So it's a very dangerous situation as financial institutions if you're not if you can't keep up with that demand and you don't have the scale. I think it's going to be challenging. So that'd be the key thing, is we really have seen a fundamental shift from supply side digitization and innovation into demand side.
It's funny you mentioned that. It kind of reminds me, like a lot of people. I played competitive sports in high school and even in college. Being an ex-Air Force officer, it was very competitive being on the SAC base. But one of the things you mentioned, supply side versus demand side. A lot of times when we're building these systems, we are thinking defense. We're thinking that we're going to actually have things that protect us. We're going to have things that could actually ensure that we don't have ransomware. But we also have to think offense. I think one of the things that all of you have talked about is we got to make sure that we're building for the customer experience. It's all about our customers, whether it's B2C or B2B. It's making sure that we're building on the offense side and that we transition between offense and defense, supply side and demand side. And I agree with you, Peter. If you don't look at both sides of the coin, you're going to have some challenges. You're going to have some challenges short-term as well as long-term. So I agree with you totally. I'm looking to see if there were any last-minute questions, and I don't see any that came in. I will just leave it with 2 minutes each for you, starting with Kathy. Let's close it out.
Well, it's been, as I said from the beginning, in trying times, there are also opportunities to embrace a new normal. And, we have seen that happen over the last year, and we invest, 25 to 30% of our revenues into innovation and, moving things forward and providing the best experience. And as Peter said, we're a B2B business. Essentially, we're still a B2C business, right, Wesley, where at the end, it all goes to that customer experience and then being able to be, agile and flexible and compliant and customer focused in a timely manner. And so we will continue on this path and are excited about what it brings us and the ability to innovate and continue to meet our customers and consumers' needs in the coming future. So appreciate the opportunity. Thank you.
Great, thank you. Wesley, any closing comments?
Well, look, I think COVID, upended the world order and everybody's day-to-day, lives in so many different ways. And, but it also has spurred adaptation and innovation, right? And I think that there's an opportunity to kind of, for all of us in the financial services industry to continue driving that innovation, to continue to, offer digital solutions, as Peter said, to think about what our customers are really looking for and give them those solutions and leverage technology to do it. So I think that what we'll probably see is that the impact of COVID in this past year will be a catalyst for accelerated innovation going forward.
I agree. Peter, any closing comments from you as well?
Just want to reiterate the point that I started with, is that if you're not going to win on mobile, you won't win. I mean, the shift into mobile is profound. So if you face a situation where it's easier for a customer to leave mobile to go to another mobile provider, perhaps a fintech for a specific service, than it is to go from mobile to another channel within your bank, then you've got a problem. And I think that's the new norm.
I agree. Well, I'll make my closing comments, and I appreciate everyone taking time from their busy schedule. Everyone knows that the pandemic-related disruption definitely impacted supply chains and the global economy in the past year. But the importance of modernizing and investing in your core technology to create a positive customer experience is very important. You can't do it without making the investment. And we've seen it time and time again that when our clients make the investment in modernizing and investing in their technology, they get a positive return as well as a positive customer experience. So in the final analysis, you really would like to have a partner, as Kathy spoke about, who you can trust and who you feel good about. And whether it's a partner like us, Everbridge, or like Kathy's firm, or as a bank like Peter's firm or Wesley's firm, you're looking for a trusted partner who you can actually work with. So again, thank you for your time today, and we appreciate you listening to us with some of our insights. Thank you again.